Hello, everybody, and welcome to our market update for Super Bowl Sunday. It is the 8th of February, 2026. Glad to have you with us. My name is Raul. It's about 2:18 p.m. Eastern. I wanted to get this update out as soon as I could before everyone gets busy watching the big game. All right, we left off on Friday with a very convincing bar to the upside, but as you can see, using the velocity system here, we have our ribbon, which for me is a bit of an indecision area. So yes, we get this move below. You probably are noticing that I've got a couple of new things on that I've been working on over the weekend, and I'll deploy these out to the group for testing for velocity too. I've got some re-entry signals in here. There's one there at 616. We get to a high of 638, and then we get that close that comes around 606 or so on that re-entry. So if we go back and if you take a look, you can see our main entry. So we're now labeling these as main longs, main re-entry, excuse me, re-entries, main exit, re-entry, exit, etc. So there's our entry back at 486 or so. And there's another label that you may not see on this chart, but you will see it on some of the other charts, which is a support and re-entry at levels throughout the long position, and of course the reverse for short position. So let's talk about the NASDAQ here for a moment. We have this nice move up, about 2.25% or so on the day on Friday. It looks like a bit of a relief rally here. Nothing overly impressive with what's happening on the volume side of things. I think this area here just turns out to be a little bit oversold, and we get a bit of a relief rally. Next level I'd be looking for here is 618 at 609 right now, so about 9 points or so, percent and a half. We could get there tomorrow. Do I have high hopes for this going into the future? Do I think it's more likely to touch this level at 636 or down here at 582? We're just about in the middle of that right now. And, I gotta be honest, I'm kind of feeling that the momentum is coming out of this market here. And I'm leaning a little bit more towards this area being touched first, the 582 level, then the all-time high. If we get a close above the ribbon here and I get a proper re-entry signal, of course, I reserve the right to change my mind and I would consider a long here. But if I had to go just on what I'm seeing on this chart here, I would look to have this level touched first before the all-time high. S&P is not that much different, although it looks a little bit more favorable. Our trend is still to the upside here. This one, I feel, is a little bit more likely to touch these prior all-time highs before we test the bottom of the ribbon here. So in this one, it's a little bit different. So what I'm noticing is that tech, especially the AI trade, which had run very hot and for quite some time back in 2025, and going back as early as the release of ChatGPT a few years ago, I think you're now starting to see a bit of rotation into, and we'll see this on the Dow. I think people want to hold companies that have real assets, real earnings, and not just moonshot type of situations. Speaking of said Dow, 50,000 on Friday. This is the ETF, and this breakout here. If the volume was a little bit heavier here, I do like the volume delta. If you go back and you take a look, you can see that this is the highest volume delta that we've had on the DIA since August of 2025. We can even go back a little further. That little wick there at the top doesn't trouble me all that much. This area here back in April of 2025, you can see what happened after we had that flush come right back down. Oh, there's something interesting. There's that trend bounce. I'm going to talk to you about this on a different chart. Original entry here, re-entry there, second re-entry there, third re-entry there, and we're currently in that third re-entry right now, which came in at 477, just around the end of, or just after Thanksgiving. So from 477, we're now currently up to 501 or so. So this one's a little easier for me. This one, I do like, and I like a lot of the companies in there. I like Goldman Sachs. I like Walmart. Big names in there that I have a little bit more faith in going forward in terms of how they'll react to interest rate gyrations, etc. So I do like the Dow here. Is it a new opening for me? Not quite yet. If I do see a bit of a pullback here, get closer to my stop loss level and a bounce, then I will get interested in the Dow. Gold and silver didn't take up a lot of our attention last week, but I want to look at those anyhow. So we had that big drop that came last Friday. When I say the Friday, I mean the 30th of January. And if we go back, there was our re-entry here on gold on GLD at 409, got up as high as 500, I think just a little over 500. And then, of course, we had that flush. So this area here, when I see these back and forth, I want to see it break either this the breakout or break down. So that is on GLD. On silver, and silver futures acting a little bit uh, differently than SLV. Trend bounce here. So the trend bounce here suggests more downside. And you can see we tested this ATR level. We come up right against it, we bounce, and we get a little bit lower. So for me to get interested in a long, it's got to be above this level, which comes in at around 82 or so, or below this level here, which comes in at 50. So big wide range again. This is a similar kind of channel that we're forming on gold. So I need to see either a breakout or a breakdown. Volume here, other than that big sell, not really all that interesting. Our re-entry long here was back at 46, the exit 67. And did we get another? We did not get a second re-entry on in this particular trend here. So that's where we are with silver. The big topic of the day, of course, on Friday was if you're on social media looking at any of these financial things, you likely have people shouting at you on your screen telling you their opinions on Bitcoin. The move on Friday was impressive. Now, I had drawn this area here, and I want to move that down a little bit. I've set a price target, which comes in right around the ATR area. So if we can break above that price target, which comes in right around 73 and change, if we can break above that, I'll be a little bit more interested in longs, although my strict long position would start right here. Do I want to miss this run? The answer, of course, is no, but for me, that is what my trading style dictates, that it needs to be above this level here. I may trade in this channel here, but my preference is to have a proper long. And the proper long on Bitcoin was way back here in April of 2025, just after Liberation Day. And from there, we've had some nice trades, re-entries. There's the exit there, another re-entry there. So the chart can get a bit messy. And in a separate session, I'm going to talk to you about how we can stay out of this chop area here. And ever since we went short back in November of 2025, it was at 105. I've talked about this many, many times. And then we have that, pardon me, we had that re-entry here back in January of this year. And this Bitcoin short has turned out to be a really good trade. Trade ideas. Had to close out Amazon, which was the right thing to do. I had to record the first loss of the year. And so far, the year's been off to a good start. This is our first loss in about 16 trades or so, or 16 adjustments in trades. So that's okay, because if I had held on to this Amazon 300 call through earnings, it would have been much more painful today. So the exit here was 1143. Currently, that is trading at, let's go to Amazon here, and that particular contract is trading at now about $7 or so. So I'm glad I got out of there. Google, same thing, got out before earnings, had taken profit on it, I believe, a couple of times. And that current item is trading, that current combo is trading at 320 and 340 was our call debit spread. Currently trading, it looks like it's about 885, or let's mark it at that. And our last exit on it was at 1055. So again, great or happy that got out of that before earnings. Earnings, of course, could have gone in my favor, but the rule is for me not to be in earnings unless there's some kind of compelling reason or there's so much profit taking that I've done over the course of or over the lifetime of the trade that I'm willing to take a bit of a risk on earnings. So Amazon, Google closed out two open positions that we currently have the silver SLV 100 110 call debit spread. That's for June. So lots of time. And this has been a trade that we've taken profit and rolled many, many, many times. The other one is FITB. And FITB is interesting. And I want to point out again this area here. So you see that new blue diamond that we have here? It's called trend bounce. So this now takes into account volume delta, and overall acceleration in momentum. And from here, the trade at 50.43, and I think we opened that around here on Monday, 50.90 or change. And it was a 55 call excuse me, 55 straight call for, was it May? FITB was a 55 call for May. Started at 115, quickly jumped up to 140 same day, about 2 hours later. So that was a good chance to harvest some profits. That same 115 closed out for 285, and then the 60 call was opened at $1.20. So that 60 call, what's it doing right now? FITB 60 call for May is trading at, get this out of the way here, about $1.25 to $1.40, so slightly profitable, but the trend is still intact here, so I'm not doing anything with this. But when I have a situation where volume looks like this, and this is going back to our old Sesame Street days, which one of these is not like the other? And you can see this one really does stand out, and we get the support at the ATR. So that will now be marked on my chart as a trend bounce. It works in reverse as well for shorts. Trades that I'm looking at today, and there were two, and I want to thank Sandy, I believe it was Richard that had brought up these two. So one was BTU, and BTU is interesting, and I'm going to show you a bit of a replay on BTU. So there's a trend bounce there. You can see that. So that for me would be, if I'm not already in the trade, this would be an entry for me. So at 16.16, say, this was on earnings. Volume, you can see a little higher than usual. This is the anomaly here, and this would be a short trend bounce. This would be a small loss, but this one here, the entry on, what is the date on this one here? Let's see if there's a way to hide this. And let me know if on the recording, if this is hiding a different part of the screen that's problematic. So the entry here, July 31st. So let's go and run this back using our Thinkorswim look back. So we're going to go to October 1st, which is, as I mentioned to you in the past, it's usually staggered, or it's usually behind by a day. And let's just confirm the pricing to make sure we're correct. 16.15. And the price here is 16.15. Okay. So a couple of different ways that I would consider this. So when a situation like this comes up in the future, this is a consideration that I would have. So on the 1st of August, they do have weekly expiries here, but I'm interested a little bit more in the monthly side of things, and I'm interested a little bit in the ratio spread. And I'm going to do a combination of a calendar, a reverse calendar, but because I like to have my risk defined, I'm going to cover it. Now, this part can be optional, but for me to have a good night of sleep, I don't really like to have this. Yes, it will require extra margin. With this, your margin will be reduced a little bit, but because it's a reverse calendar, the margin requirements will still be a little bit less friendly than they were if this was a traditional calendar or traditional spread. So here's the position that I would consider on that day. We're at 16.15. Buy the $17 call for 49 days out. So this takes us into September. So it's a wide spread. Let's assume this pricing is, you know what? Let's assume this pricing is 105. Excuse me. So remember, this is a $16 stock. To get to 22, I would need a pretty significant move. The expected move, not that, I mean, this has some impact, but nothing significant. This says that the expected move is about 379, which takes us to exactly $20. So I'm outside the expected move when I sell the $22 calls that are a little further out in time. But I'm selling two of them. So here's the one, here's the two, and then here's the third leg of the butterfly here. And this is just strictly and I call this the so I can sleep more comfortably factor. The way they trade the way the trade, excuse me, the way the trade sets up, let's assume the bottom one is not in play. Okay. So our delta here, positive, it's plus 12. Our theta here, interestingly, is neutralized completely by these two shorts. And our gamma, which is important to me because uh, if this goes parabolic or there's a lot of convexity, I don't want to be holding only one long but two shorts. So all of this for me plays out well. Now I'm going to do a throwaway $30 call. So now my max risk is around $8 or so. So if this thing runs to 30, yes, there's going to be time value here, but if this thing runs to 30, my max risk here is 16. I've got 13 here, and my total loss at that point, if it lands on 30, would be about $300. But because I am not planning on holding this position to expiry, I'm planning to do things with it as the price of the stock moves. And that's the difference between holders of these stocks for long periods of time versus me, whereas I'm looking for an entry and then I'm looking for an exit. So there's my entry, there's my exit, and I'm taking profits along the way. You can see for the next month or so, it doesn't really do a whole lot. So let's play this out and let's get to this high on the 13th, excuse me, on the 12th of August, which on our chart would be the 13th. So remember our net cost here, let's just do the numbers so they're a little bit easy to look at. So 30, you know what, let's handicap ourselves a bit and say it's good. We're going to get 32 for it. So we're paying $1.05. We're collecting 64, and let's say in this case, get 7. Does that seem right? Yeah, it's 7. So $1.05, collecting 64, which is 41 cents, and then another 7. So let's say our total debit on this trade is 50 cents. Okay. So you can see how we kind of play out. Remember, our thetas are just about neutralized. We've got the theta here, and that's the cost of the insurance that I would want. And you can see over the next couple of days, we don't really do a whole lot, kind of stay a little bit positive. Here's another one. So the date that I want to get to is the 14th, that first move. So here's our move up. Here's our P&L on the 14th. Remember our total debit amount was about 50 cents or so. And it looks like we're up about 100% on this trade. Now, again, don't do anything for a little bit. Let's check this date here. September 5 would be September 6. And So our theta now starting to separate a little bit. So we're now losing a little bit of money by holding on to this position on a daily basis. You could maybe, if you said this is not working for me, I want to consider rolling this out so that I have positive theta. Our gamma is now starting to, you can see there is a bit of difference here from the gamma that we started at. But let's go to that 6th of September look, and you can see our P&L here. Now, this looks a little bit generous, so I want to go back and make sure that this is not just a widespread that we're being given the benefit of. So here's September, and we have the 17 call, and it's 87 to 116. I'm sorry, September. There we go. And we said it's the 5th of September, 17 call. And you can see the stock is at 1913. So yeah, 225 to 235. We're actually not getting anything that we wouldn't likely get in the market. So this is real. And let's also now check to make sure that we're not being shown a rosier picture on this October position. So remember, 22 is still, with 41 days left, you're looking for, it looks like about a 25% move to get to 22. So there's 42 and 46. So we had collected 32. So yeah, this all seems right. So on our risk of 50 cents, it looks like we're up about $100. So from that move of 16, from that move from 16 and change to 19, which is a significant 20% move, the fact that we had sold this outside of the expected move and we had sold two of them to minimize our debit on this position has really worked out. And this, you can see it's not really doing a whole lot. It's not hurting us. It's not really helping us. Now let's take this out to expiry, which is the 19th. And I think we have a pretty big move. Yeah, it actually, you know what actually happens? Yeah, just before expiry. So let's take this out to the 19th where we get to 22. And so there's the expiry there. And you can see had we taken profits at that 200% level, as we're getting closer to expiry, our theta is really was starting to accelerate a little bit, but then uh, it looks like on the 15th of September was where we maybe had our max profit level. But even if I had waited until expiry, I'm still walking away with just about a 200% profit. Remember, 50 cents was our debit. We closed this trade out for a net 100. So when I get these kind of entries here, and you know my personality, I don't want to have risk that is one, unlimited, or two, not defined. So I want to, this third position here, this third leg, completely optional, but I want to take that option. You can see it doesn't, in the end, it didn't really hurt me. It didn't help me, but it didn't really hurt me. But what it did help me do was not have to worry about the trade in case of a gap in my favor. So that's what I'm looking at for these kind of trades. Now, BTU, my entry here, depending on the way the options look tomorrow, I'd consider this with a stop loss here at 34 and change. So right there, that's where I would consider placing my stop loss. Now you can see there was a reentry on this at 31. Would I have taken that reentry at 31? That's a hard no for me because it's a little bit too much. It's more risk than I want to take. My goal for this is to have this no more than 5% from my stop loss. Now we're getting in that level now, 36.90 versus 34, call it 34. So at 35, what's 5%? About $1.75. Excuse me. So I'm almost there, but I do like the look of this bar. This reminds me a little bit of FITB from last week. So this is something I would look at. MP is another one. And I was talking to our friend Richard after the session and talking to him and seeing what he thought of MP. And I think he liked the dividend on it. I'd like to see this above the ATR for me to consider a new exit. I'm sorry, I made a mistake. It was ET, not MP, because I know ET looked a little different. So I really like ET here. The issue that I ran into when I wanted to open a position for myself on ET was that it is a special type of uh, equity issue that has an interesting distribution or dividend component that has some withholding issues for me buying it from Canada. So this one I had to pass on, but I really do like this. I'd consider maybe a $20 call for 90 days to expiry. So I do like ET here. And the last one was NAT. And we talked a little bit about the tanker business. This one here, 429 to 389 is way more than 5%, but because the actual dollar value is tolerable for me, this is something that I just bought a small, I think it was a 450 call in. Nothing significant. It's just a bit of a fun play here, but let's see how this plays out. I like the story behind the tankers here. Okay. Economic news coming up this week. We've got jobless claims on Thursday and CPI. Now, I feel like CPI is not as well regarded for volatility as it used to be. I remember when the CPI number was a big deal, and now it just kind of passes, and we think during our market chat, oh, by the way, CPI results or numbers were out this morning. So will this have an impact on the market? I think everything can have an impact on the market, but I don't think this is going to be of any great significance. Unemployment report, retail sales. Retail sales could be interesting. I know we've got Walmart earnings coming up. And speaking of said earnings, is Walmart this week or is it the following week? And it looks like it is the 19th. So that would take us into the following week. Yes. So that'll take us into the following week. What do we have? We've got Coca-Cola on Tuesday, Shopify. That's a bit of a retail play as well. McDonald's on Wednesday. So maybe we can talk about this while eating our while having our Egg McMuffin on the Wednesday morning market chat. Cisco after hours. So Cisco all-time highs most just recently here after what 15 years, maybe 20 years or so. Coinbase, DraftKings, Toast. Uh, what else do we have? Brookfield. That I don't know if that really does anything or rates for us. Moderna could be interesting, and Humana was certainly hurt by the announcement regarding the Medicare billings. So we'll see how Humana, I think I'm more interested in seeing what they say for the outlook rather than what their results were. Robinhood on Tuesday as well. So that can give us a bit of an indication in terms of how the brokers are doing. Okay. I think we have covered everything. On PolyMarket, I gotta tell you, I found something interesting. So everything that I'm reading, it speaks regarding the Fed chair. The articles all say Trump has nominated Kevin Warsh for the Fed chair position. But I find it interesting that this market is still showing is Kevin Warsh to be nominated for the Fed chair, and you could still buy this at 95 cents. So I am a little curious in terms of what is it that the market knows and why is this not at 100%? Because it seems like between now and whenever the nomination is now, unless there's a chance that the nomination happens, but Mr. Warsh isn't actually approved to be the Fed chair. So that is something that could be a possibility, but if I roll this, and you can see it's not that there aren't asks available at that 95 cent mark, and the amounts are not insignificant at 95 cents. You can wager up to $4,000 or 4,275 bucks for a 5% return, which looks it looks interesting. So I just wanted to point that out, that it seems like we talk about Kevin Warsh's nomination as a fait accompli, but maybe there's a little bit more to the story. So I'll keep an eye on that. It's 2:49 p.m. Enjoy the rest of your day. We always wish you profitable trading. Our next market chat comes to you tomorrow at 1 p.m. Eastern. We hope you can join us then. And I think we have covered economic data, earnings season, trade journal we covered, and we looked at some of these recent trades as well. That's it. We'll see you tomorrow.